Good morning. My name is Miguel Gonzalez, and I'm a retirement specialist with over 19 years of experience helping clients in retirement income planning, overseeing investment of funds, and designing retirement plans. Let's talk about retirement planning tips during COVID-19. During this time, it may be somewhat comforting to remember that you're not alone. Everyone is wondering what the immediate future holds for the impact of COVID-19 virus. Everyone else has the same fears and anxieties that you're feeling right now. When it comes to investing in your retirement plan, all you can really control is how you react. Sticking to sound, fundamental investment principles and staying the course will help you make it through this difficult time. Here are some practical tips for surviving market volatility in the face of what may seem like an extraordinary crisis right now. Avoid hitting the panic button. During this time, it's very tempting and very normal to think about getting out of the stock market, especially on March 16 when the S&P 500 suffered its worst decline since 1987 stock market, also known as Black Monday. But selling solely because the stock market has suffered a big decline over a very short period of time may be the worst thing you can do. It's understandable if you're struggling to keep fear in perspective right now. Over time, however, the stock market has historically risen despite significant economic challenges, terrorism, the burst of housing bubble in 2008, and countless other calamities. Investors should try to always separate their emotion from their investment decision-making process. What seems like a massive global catastrophe one day may likely become a distant memory a few years down the road. After all, when was the last time you thought about Black Monday, if you're even old enough to remember it, or the Great Recession? Keep a long-term perspective. For many people, a retirement account is the largest investment asset, and that's probably the asset that you're most concerned about right now. Keep in mind that if you're investing for a long-term goal such as retirement, which may not begin for 2 or 3 decades and could last 2 or 3 decades, you will have plenty of time to ride out this current market downturn. Maintain a diversified portfolio. Having a percentage of your portfolio spread among stocks, bonds, and cash assets is the core principle of diversification. Doing so helps manage your risk because historically, not all parts of the market move in the same direction at the same time. Losses in one asset category, such as stocks, may be mitigated by gains in another, such as bonds and cash. Consider this a great buying opportunity. Experienced investors often view bear markets as great buying opportunities because the valuations of good companies get hammered down due to the circumstances beyond their control, such as what is happening now with the airlines, hotels, oil companies, and many other industries and sectors. If you can afford to, it's important to keep contributing to your retirement account on a regular and consistent basis. Keep on dollar cost averaging. The principle of dollar cost averaging means you simply commit to investing the same dollar amount on a regular basis, like you're already doing with your retirement plan. When the price of shares in a stock or investment portfolio drop, like it is right now, you're actually buying more shares. Conversely, when the price goes up, you'll be buying fewer shares. Over the long term, this provides you with an opportunity to actually lower your overall cost per share. Be real about your risk tolerance and your tolerance for risk. When you started saving for retirement, you may have taken a quiz to help you gauge your comfort level with risk and choose investments accordingly. Whatever you did, you probably never thought it would be tested like it is right now. If you're literally not able to sleep at night right now due to all the market volatility, that's probably the most reliable sign that you may need to consider a larger allocation to more conservative investments. However, make sure you consider the next and final tip before you do anything. Think, reflect, sleep on it, and consider talking to a financial professional. If you make changes to your retirement plan investments, do so in a thoughtful and careful consideration. Talk to friends and family, and remember, they're in the same situation you're in. Read and digest articles from a trusted financial news source, and if you haven't already, consider talking to your plan advisor to get your perspective and guidance. Once again, this is Miguel Gonzalez with Cortburg Retirement Advisors. please take a moment to click the like icon, and don't forget to also subscribe to my YouTube channel to receive our weekly video podcast every Monday morning. Thank you for watching. Be safe, and I will see you all next week.